All right. So next on the board is Dave.
Check, check. Can you hear me?
Yes, sir.
Perfect. So I kind of wanted to start with a note. I put in the food for thought channel. I think it'd be great. Just quick
Yeah, I
little
saw
note.
the scientific process.
So it's kind of the scientific process, and I kind of want to just explain the thought process behind this and how it's relevant to trading and more specifically with methodology and tape reading. It starts with an observation in question, and the observation in question are what we bring to the table for traders exchanges for these night reviews for any aspect of the learning process, right? We start with the question. It all starts with a question, but we have the ability and the amazing factor to be able to jump to that report conclusion via the responses that you generate for us, Rich, through all of your screen time and your experience. So you've already gone through the scientific process with tape reading and this methodology. So we have the luxury to be able to have those reported conclusions told to us and then implement that to our trading. But I think where it really changes the game as a tape reader and to get to that right side of the chart in terms of level of trader past 5 into the 9 type of trader, you start to be able to master this scientific process where you have the question, but we have the luxury of knowing the the answer, but what truly lies into success is not just knowing the question, is truly diving into the research behind it, the data behind it, and testing it yourself. So yes, we have the answer, but it really comes into if you how bad you want to be a successful professional tape reader. These other 4 areas cannot be skipped and missed. And I just want to make a note that if you're not asking the questions, you're not even starting with step one. And if you're not starting with step one, you'll never get to the last step. And that's just kind of something I wanted to briefly touch upon. That's all really had. I don't know if you had any thought process on that, Rich, as well.
No, I think you're absolutely right. I think that's, honestly, I would not be the trader I am today if it wasn't the fact I had to do this all by myself. I had no way to ask. So I had to ask a question, but I had no one to ask it to. So I literally had to ask it to the market. And it took literally the observation and research topic area. My research was screen time. Okay, I would create a hypothesis based off of what I think is percentages, but then I'd actually really have to start to test that. So if I think this happens 60% of the time out of 10 trades, I need to make sure 6 matches. Otherwise, my percentages are garbage. I can't say something's 80% without testing it, And the thing about the scientific method is you need at least 100 examples before you can truly put a real percentage or a real answer to it. And then analyze the data. I think that's where everybody lacks big time. What's analyzing data? Journaling. I know for a fact, and I hate to even to even think about it, but about over my career, I would say 85% of people don't journal. And they hear it, how important it is over and over and over again, and they don't do that. Because what happens is that, they'll have, observation or a question. They'll ask it, they research a topic, their screen time. Okay, they come up with what they think that screen or what those prints are going to mean. They'll trade it and then just leave. That's it. They just end. So they do a test, but never go over the results of the test. And I mean, this is a really great insight that you brought into it, but from over my experience, that's where I see it kind of stop. And at the same time, report conclusions, that's, me giving you the answer to a question. My answer to a question is not going to involve every piece of data that came with going over it to get to the answer of that question. So unless you do it by yourself, you're going to be missing pieces of it.
Yeah,
That's really,
absolutely.
really what I've found is just that analyzing the data part is you can't do, an experiment and then just stop because you never got an answer.
Yeah, and I think we obviously have the luxury to be able to ask you and get that immediate response. So it takes a lot of the work out of it, but that's not just because we get a response from you on what should happen based upon these type of prints or this setup or this type of variable doesn't mean your work stops there. You have to we have the ability to fast forward that process to where Rich had to do it 100 times. Maybe we only have to do it 20. But at the end of the day, the process needs to be repeated over and over Rich didn't get to where he was without this process. Doug didn't, Nitesh didn't, Donna didn't, and this is something that is any foundation of a professional trader is going to repeat this cycle. So just wanted to make that note. I see the lack of questions in Traders Exchange, and if you have lack of questions, that means you don't have journals. You don't have journals. It's just the to break a pattern, you have to be in the pattern, and you just have to go through this whole process to really get to the level of being a professional trader. And there's just no skipping any of it, even though we have the luxury of asking the questions.
So one thing that I want to just add to that is that when you ask me a question, that's not, I don't want you guys to ever take it as that's just black and white. Because a question, when you ask me a question, what I'm going to give you, well, I'm going to give you answers over my experience. But really what I'm doing is I'm giving you the right way to start analyzing it. It's not definitively just that's what it is, because you need to be able to understand, just like you were saying before, you need to be able to understand all the intricacies that go into what that answer is. So my answer shouldn't be, well, now I just know exactly what it is. Your answer should be, now I know what my mindset should be to focus on testing, hypothesis, and all the actual parts of the scientific method. It shouldn't just be an end all. Because if you had that question, there's probably, you need to dig a lot further in than you really know you need to. So a question is only as good. Why. Exactly. A question is only, when you ask me a question, it's not that you're just going to learn how to trade now. I tell you, screen time is the one thing I wish you could pay for, but you can't. You need to have screen time. And screen time is not just about looking at things exactly the way that I do. It's about having that right mindset. But you might see something that comes in a little bit differently. You might be watching and I'm not watching. You know, it's a way to think. It's how, this is how it really is, but now dig into it. So your mind start now from that question is able to focus in a correct and productive way, rather than having to, have 10 different possibilities and narrow down those 10 different possibilities. I'm going to narrow those down for you, but you still got to pay attention. You still have to have your screen time. We just did a 1 through 4 level classes where, everyone probably was thinking, I know everything about 1 through 4. It's really simple. But when you see what actually goes into them, that comes from screen time.
Yep, absolutely. And these are the dues that you have to pay to get to the place that you want to be. So just to know that, a great note, just wanted to make, just because of the lack of questions I saw, and kind of transitioning to the current question that I have. I've asked the same questions probably multiple times, and I know I have. I repeat it, and I'm like, oh, I've already asked this question, Rich. But there's different situations, circumstances that the same questions arise in, and the more I ask them, the more of a master I become at them. And until I'm a master and I have the solid foundation and true confidence to take max size on something like that, then I'll keep asking the same questions. So kind of transitioning to the question I have is, I've gotten to the point where I have the ability to analyze the dominant market maker and all of their variables to create a high percentage game plan. So my biggest area of opportunity for growth is timing. I find that most of the trades I get shaken out of end up going the direction intended. It's very rare that I take a trade and I'm completely off on game plan, on personality, and all the variables. I used to get frustrated at this. There's a period of time where I would just get shaken and then watch the trade go to the price target without me. However, I'm at the point now where I just look for a better entry, and I just look for more of opportunities to add to the percentage of that trade. So what advice would you give to your old self if you saw this pattern within your trading? How would you further investigate it, and just kind of insight into maybe the previous trader Rich was that had that issue where they had the reads correctly, but they needed to improve on the timing just to get to that next level.
All right, I'm just going to change my battery real quick. Give me 1 second, and we'll get into that.
Yeah, absolutely.
Can everyone hear me?
Yep.
Okay. All right, so this is a phenomenal question. It's funny because I can tell a lot about the questions that are being asked from people and kind of where they are in their career. And Dave, I mean, you've just been exponentially getting better and better just with your mindset and everything just by this question. So I'm going to give you an answer that fits the question you're asking for your trading. One of the biggest problems in the beginning of us being a trader is that There's finding a happy medium between being conservative and screwing yourself. I know it kind of sounds weird. Every trader has always said, okay, what, oh, well, if I would have just stayed in, it would have ended up coming back. I keep getting shaken out, and then the stock ends up going back to it. So what I noticed, the advice I'd have to give myself is that when I really started to see less shakeouts and my percentages going higher, I started using true calculations. What I mean by true calculation, now I don't mean, for instance, we could talk about like let's use Walmart for a second, just because it's got a bunch of levels. And we could use RBA. It doesn't matter. All right, so let's say Walmart. Okay, if I want to go long right now, I know what's my price target going to have to be.
So right now, it'd be 135, the next psych level.
It's got to be the next psych level because I know something's going. There's a strong possibility of something going on. Okay, but what if that 135 actually gave me the prints to tell me it's 137.50, and I'm using 135 as a price target? What's going to happen to my trade? I'm not going to give it enough. I'm not going to give it enough room. My stop loss is going to be too tight. So when we first start trading, we have to act conservatively. The key to getting your stop loss, because this is where this gets very kind of in that gray area. Because if you don't know how to calculate correctly and you're a newer trader and you're making price targets too much, what's going to end up happening, no, not even for price targets too much, but you're making wrong reads. If you're giving yourself extra room for your stop loss, you're screwed. Because let's say you want it to go to, you think it's going to 135, and you're like, okay, well I'm going to give it, because it says 137.50, it's going to be my price target, I'm going to give it way more room to go. Well, if you're wrong on your read and it's just going to keep going down, you're going to get hurt bad, and you're probably never going to be able to, if you keep doing that, you're never going to be able to trade again. You understand? Because you're going to take huge losses in stocks. So the key, it's not necessarily the timing aspect, because a trigger is a trigger is a trigger. So what I can say to you specifically is that you might want to look for better spots. But I know that's not how you want to trade. You want to be able to trade every trigger that comes out. Doesn't matter what number it's at. Doesn't, psych level, that's perfect if it's by a psych level. But no, you want to be able to trade. So as you start to get more advanced in your trading, what you're going to have to do is start to use actual price targets, because you can now trust yourself. If you see the prints that say the stock has the ability to go to 137.50, 135, even though it's a psychological level, isn't that big of a deal, because the prints say it's going to 137.50. And you'll notice that if you use those actual price targets, a lot of stocks you get shaken out in and you think that you weren't on the right timing, if you had that extra part of your stop loss, they'd all work out. You see what I'm saying here? But it's a hard thing for me to be able to teach someone, because if you're a level 1 trader and I talk about this, now all of a sudden you're giving your stop losses way more room, and you're probably wrong a lot. Your read just isn't correct. But as you get to the point where you can trust that if I say 70, if you say 70%, it's 70%. I tell you guys all the time, a newer trader, if you think it's 70, it's probably like, 58 or something like that. But when you get to the point that you actually trust that, you have to start using real price targets. You'll see it will drastically change the amount of times that you get shaken out. But the problem aligns is that you need to get to that point first before you can use actual price targets. Otherwise, you're going to take huge losses that you can't come back from. See, in my opinion, I think for a newer trader, it's a lot better to have the strategy to take 2 5-cent losses and then make 50 cents than it is to be able to let that go, the extra 5 cents where you don't get shaken out, hold it throughout that point to then make your 50 cents. You see what I mean?
Yeah, for a newer trader, I mean, if you're holding that, you should have cut it and you had a small loss, your emotions can accept that. But
You're not
Yeah,
going to go in that spiral that all of a sudden starts
exactly.
ruining your day because you lost $2. But when you
Right.
get to a point where, if your percentages are your percentages, when you think something's 70% out of 10 trades, it happens 7 times, well, start trusting yourself. So now instead of saying, 135, I know it's a psychological level. I know there's going to be something that happens there, but if the prints say it's going there, that needs to be implemented into your actual game plan. This is where the difference of, like you said before, getting to that right side of the scale of the level of trader versus the left side. There's this journey that needs to be taken, certain things that need to happen, even though they're not perfect, they have to happen for newer traders. Because if newer traders don't do that, they're going to get hurt terribly. They're not going to be able to come back from a loss that goes away, $2 or something like that. When in a bigger trader, $2, who cares? Or not even a bigger trader, but a higher percentage trader. You go out there, you find someone with a bigger range, boom. You'll be able to figure it out. You'll be able to come back from that. So my best, it's not about timing per se. Now, yeah, we could add everything into it. Now, make sure that there's substance. If you're looking for trades going towards, you don't need the substance. There's a lot of other variables, that we talk about that are intertwined into understanding the timing of what a trigger is. But there's certain triggers that they're not even triggers, certain trades that you don't have as much room because you're trading conservatively. And and it's not a bad thing because it's going to stop you from, you're going to cut your losers. It's going to stop from any type of really big things happening, and you're going to get those great trades, and you'll be where you are. But it's a lot to do with your stop losses. It also has a lot to do with entries, because I know a lot of people don't get in and anticipate great entries on their triggers. So they're too far away where their stop loss doesn't allow it to even come back down to a trigger. It's another big thing that you need to work on, or everybody needs to work on, is making sure that where your entry is on that stock allows it to test the bottom of that trigger. Because if you're getting in and you have to get out before it tests that bottom, you're not trading as efficiently as you could. Make sense?
Yeah, that helps answer that question a lot. Kind of going back to the scientific method, that observation, not a question, is something that I saw in opportunity within my own trading is timing. So I saw, looked
I don't
with your
think it's
advice on that.
necessarily as much as the timing, or as it
Hmm.
is the ability to let the stock do what it needs to.
Interesting.
Because there's a lot of great triggers that come in and then they come back. You'll see it all the time, and they test the trigger. How often are you allowing yourself to even be able to test that trigger? Because at the end of the day, if I see a trigger and it's a high percentage trade, I'm going to take it no matter what it is. Now, I would much rather it be at a psych level, or somewhere where I could add extra variables coming into it, but I'm not going to miss that trade because I'm not worried. I'll take 5 shakeouts in a row. It's no big deal because I know my next 20 trades are going to be what they are. So I don't think it's necessarily a timing issue. Unless you're trading in consolidations and stuff like that, I think you're getting to a point where your price targets, if they were exactly where they need to be, and not even where they need to be, what they say they're going to be, your timing would be a lot more on point.
And with that price target, I stick with the conservative price targets, but I would say maybe 60 to 70% of the time it goes past that conservative price target. So with that real price target, is that actually getting to the point where I have the greater understanding that this can extend to actually this price target
Well,
and
you
can
just know
adjust.
exactly how it's going to work. See, the way that I like to teach people is that if you know the stock's going to move $5, that's great. A price target of 3, you're set. But that also is you got to remember the opposite reaction. That's also going to affect your stop losses.
Mm-hmm.
When in reality, if you know the stock's going to move $5, your stop loss should be $5 stop loss. So
Yeah, instead of a
it's
$3.
almost thinking conservatively, but you're going to have to start acting with the way that the stock says. Because otherwise, if the stock's going to move $5, and you're marking it up for $3, you are going to see a lot of shakeouts. That wouldn't happen if you actually use the $5 one.
Yeah, absolutely. That helps so much.
But you need to make sure, I know you're at a point to do this, but anyone else that's listening, you need to make sure you're at a point. Don't just be like Rich said, don't be conservative anymore. Let's go crazy. because I promise that's not going to end well. You have to be at the point where you know exactly where you are. How would you determine being at that point? What's your percentage? Anything over 70%, if you're over 70% in your trades, you're there. Now, that doesn't mean you're emotionally there, because you might start upping your shares and then all of a sudden everything changes. There's a lot that goes into that. I mean, we could talk about, the psychology that goes in, forever. All right.
Sweet. Thanks, Rich.
Again, great question. You can tell, guys, the people that are asking these questions are going further and further past. We're about to be in June, almost halfway through the year. Before you know it, it's going to be January again. And I'm going to be talking about who do you want to be for 2023. So as Dave said, with the scientific method and questions, utilize the resources that you guys have. All right, guys, I will talk to everyone in the chat, and happy trading.